Hey guys, what is going on? Welcome into the video. So in last week's video, we talked about the upcoming FOMC meeting and how downside was the likely scenario from that meeting, and that is exactly what we got. A couple of charts that we looked at last week was this long-term trendline backtest on the S&P, which resulted in a strong rejection like we speculated, and then the rising wedge setup off of lows, which is a bearish reversal pattern in which the market broke down from, and then backtested it on the initial FOMC spike before heading back to the downside. So in this video, we're going to talk about what to expect next for the stock market and how to trade it in the week ahead, along with some major catalysts we need to talk about, and then a few individual stock setups and trade ideas for the week ahead. Let's go ahead and get on into it. So starting out, we have a couple major catalysts this week, with the first being midterm elections, and Tuesday the 8th is the election day. Now if you ask me, I'm unsure how the market will move off of results. 538 predicts that Republicans have the edge based on polling, but a modest one at that. The stock market would certainly favor Republicans winning the majority, but it's still pretty unknown how it would move off their results to either side in the short term. What we do know though is that midterms in November is historically a bullish time period for the stock market as a whole into the end of the year. So we will see what happens, but I definitely would not trade just based off that historical seasonality, as this is just something to note. So the second major catalyst that we have this week is CPI data on Thursday the 10th. The median analyst estimate is currently at 7.9%, and the Cleveland Fed's estimate is at 8.1%. And the major risk here is that the CPI number has come in either at or above the Cleveland Fed's estimate 16 out of the last 19 times. And credits to Mott Capital for this data. So if analyst estimates stay at 7.9% into the CPI print, and let's say CPI comes in at 8.1% or above, man, it could get ugly for the stock market once again, so just keep that in mind. Alright, so let's take a look at a few charts in the S&P 500, some possible scenarios this upcoming week, and how to trade it. Taking a look at the futures chart, we're in a pretty neutral spot currently. Last week I was very bearish going in, but this week I don't have that type of conviction to either side just yet. The rising wedge breakdown has played out and resulted in a 4% move to the downside, so now it is decision time for the next directional move. Last week's drop led it right into the spot where buyers had to come in, which was right at the trend line, which triggered the start of this breakdown, and they did come in at that spot. So the zone that is a must hold for buyers from here is that 3700 to 3720 zone, and as long as that holds, this rally is still intact, but if it breaks, look up below because this market can drop big. So below 3700 to 3720 would trigger the breakdown, and because the spot that triggered last week's breakdown was the 3840 to 3850 zone, that now turns into the false breakdown trigger, and above 3900 would trigger the next full breakout and likely send the S&P towards 4000. So to keep things simple into next week, between 3700 and 3850 is mostly a chop consolidation zone for now, where below 3700 is the downside trigger and above 3850 would start the upside move. A possible upside scenario could look something like this, and a possible downside scenario could look something like this. Overall though, I do think that a backtest of that 3850-ish zone is likely, as it was able to hold that 3700 key support for 2 days in a row now. And that test of 3850, if it does test, will be the decision point. If it breaks and holds above, upside is back in play, though if it rejects and leads to another test of support, I do believe that the support would break this time around, as it is now well tested, which means that there's less demand for buyers at that level. And if it was to break down, it would lead to a test of around 3645 and below there 3580 to 3600. Below 3580 is the gate to new lows, but that's just something to think about if it was to be tested in the future. Now taking a look at one indicator that is super interesting right now is the VIX. So during the large drop last week, the VIX pretty much had zero movement. For those who are unfamiliar, VIX is the measure of volatility and also measures fear. So when volatility goes up, fear goes up, etc. So an important question we have to ask ourselves right now is, what is the VIX trying to tell us? I think that there are two possibilities here. Number one, it is telling us that the market is set up for a strong end-of-year rally, or number two, which I personally think is more likely, is it setting up for a massive spike in fear, and the market has a chance to dump big if that does play out. This chart shows the comparison of the current VIX in white versus the VIX from 2006 to 2009 in blue. So the VIX in the great financial crisis looked a lot like the same before the massive spike as it does currently. The VIX is also oversold on the 4-hour chart for only the third time this year, and each time that it has been oversold like this, it's resulted in at least a small bounce and then a large spike followed not long after both of those other times. Another visual, if we zoom out, is it's now backtesting this 2-year long plus trend line. If it bounces and spikes off of here, look out below for the market. And one last indicator we're going to take a look at is the hidden bullish divergence on the RSI of the VIX. So this is defined as when the RSI indicator is making lower lows and price is making higher lows, and this signal usually leads to a bullish reversal. This is exactly what we are seeing now on the VIX on both the daily charts and 4-hour time frame charts. Now, I personally wouldn't be trading purely off the VIX chart, but this is leaving some hints of what could happen to the broad market in the very near future. Alright, so now we're going to take a look at a few individual stock setups and trade ideas for the week ahead. So the first one we're going to take a look at is a bullish setup in Crocs, ticker symbol CROX. So Crocs bottomed off the 11-year long trend line back in May, which of course is way before the broad market has even thought about bottoming, and is a big sign of relative strength when a stock bottoms way before the market does. The company has continued to have strong earnings where they beat and raised on guidance, and also is trading for a very cheap earnings multiple. It's also starting to break out of this 8-month long inverted head and shoulders bottoming pattern, with the close above the key resistance at 84.3, triggering the potential start of this breakout move. The move is also backed by volume supportive of the breakout, which is a strong sign for continuation of this move. So now watch for this to hold the breakout above 84.3 as new support, with potential targets above at 96.14, 100, and then 110. Many breakouts have failed this year due to the broad market, so I would have a very tight stop loss if entered on this one. The next one that I'm watching as a bearish play to short or play put options on is Tesla stock. So this is in a massive 2-year long head and shoulders pattern and is right on the verge of seeing its next leg lower. So I have $200 per share as key support on this, and if it has break and hold below 200, I believe this will make a move to $180 minimum and potentially $150 area if things do get really ugly. And the last one we're going to take a look at is Apple stock, which is sitting right at a 2-year long trendline support. Zooming in a bit, this also looks like a head and shoulders pattern as well. If this stock breaks below last week's lows around 134.5, look out below as this stock can drop big. Potential targets below at 130, 125, and then 120. And all I'm going to say is those Tesla and Apple charts are not looking good for the broad market conditions, as if the leaders fall, which a lot of people would define as Apple and Tesla as the biggest cult stocks, the stocks with the largest following that people nonstop buy the dip on. If those break, then I would expect the market is headed a lot lower. So that is everything that I'm watching this week for the broad market, including those major upcoming catalysts, a few individual stock setups, and those key levels that I'm watching for on the S&P 500 to give us the broad market direction. I hope everybody enjoyed and I provided some value to you. If so, make sure to like button and subscribe button. It helps me out a lot, and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts. And thank you all for watching. I will catch you next time. Good luck trading this week. Peace out.